Industries that are hot, sectors set to outperform the market. That's what's here in Zach's Industry Rank Analysis. Well, we're coming up to the beginning of another earnings reporting season, this one for the first quarter of 2009, so what better time than to get a little bit of a preview across a variety of industries from Charles Rotblut, who is our senior market analyst here at Zacks.com. And so on the radar, first quarter earnings, and covering too many industry watchwords to put up on the radar screen this week, but let's just take it from the top over here. And I've just been thinking about this. You know, if the analysts are still too optimistic in their numbers and everything, are we getting a true read on the current state of affairs as far as corporate earnings are concerned?
For the first quarter, they have a decent sense, I would say. We'll still see some revisions. I think by and large, when you're looking this far into the first quarter, I think analysts probably have a decent sense of what the numbers are going to be like. Obviously, actual earnings never match up the forecast, but the question really comes not even so much for the second quarter, but when you look at the second half of the year, there's a lot of debate about what the economy is going to look like come August, come October, come November. Even the Fed, as we record this Wednesday morning, March 18th, I'm sure there's internal debate right there. We do know unemployment is going to rise throughout the year, but when we look at full year earnings, still a big question mark, and that contributes to the volatility in the markets. Nobody knows exactly how to value stocks.
So you're not looking for an earnings pickup in the summer necessarily?
No, I am not.
All right. On the aggregate, first quarter earnings down 14% year over year is what you're calling for. On a company-specific basis, numbers could be better, could be worse. So you break it out as potential winners, potential losers. There's been some picked up M&A activity in that medical and health group. What do you see going on there? Is that going to translate to better corporate earnings necessarily?
It won't translate to better first quarter earnings. Actually, it won't have any impact on first quarter earnings. It's something we are saying, though, simply because you do have a lot of cash-rich companies. In the case of large pharmaceutical companies, you're looking at pipelines where they're actually either somewhat barren or they're not as full as they could be, and they're looking at some of these smaller biotech companies, or even in the case of Roche Genentech, some of the larger biotech companies, realizing that at the end of the day, it's cheaper and probably safer to buy out a biotech company with products under development, particularly in phase 3 trials, versus trying to develop a new drug from scratch, especially considering the long time it takes to get a drug from the laboratories out to, say, a Walgreens or CVS.
So that aside, you're still looking for medical profits to grow?
I am, and the big reason is this is a sector, and this should not be any surprise to anybody. We're really looking at a sector here that's pretty much resistant to the economy. Obviously, on the fringes, there's some areas people are having a hard time affording copays, affording their prescription drugs, but by and large, we are looking at continued growth, and it's really a case of this is a sector that's not economically sensitive, or I should say less economically sensitive. Hence, we are going to see some pretty decent, not great, nothing wow, but pretty decent growth within that sector, particularly within the medical care groups.
You bring out the home builders in this week's piece. What do you make of the recent housing numbers, housing data that was released here just a few days ago?
I think it was surprising, but I do think it was a temporary blip. You know, none of these numbers ever move in a straight direction. It's a volatile number. We're definitely not out of the housing slump, and certainly if you look at the trends on unemployment, we're going to see more and more people losing their jobs. That makes it harder to afford houses. Certainly doesn't help with what we're seeing in terms of the credit crunch. If your job's at jeopardy or you lose your job, certainly you're not going to be able to get that mortgage loan. So I think it was a temporary blip. I do talk about the home builders. We are going to see a pretty dramatic improvement versus what we saw first quarter in 2008. But you have to realize that we're looking at comparisons here, not actual growth. These companies will still report losses.
What about other bright spots? Any other sectors that you say are going to stand out here in first quarter?
Well, I think a lot of times in these sectors, it's going to be a little bit of a mix depending on the companies itself within the actual groups themselves. I do talk about some potential winners and losers in here. Obviously, we talked about medical here, talked about home building as well. I don't want to give away the entire article, but you know, I think when you look across the board, it's important to realize there will be companies in pretty much every industry that will have some good numbers. So even though the entire industry is bad, there'll still be some decent companies. But the thing for investors have to realize, if there's an overhang of bad news throughout the industry group, and for instance, I talk about with the semiconductor group in terms of the losers, it's going to affect the stock price. It's going to keep the stock price from rising as much as it might have in terms of a positive news. But we can take a look at retail, for instance. GameStop recently had great fourth quarter numbers. Business is still going strong, but it's perceived as a retailer, and that's hurt its stock price. So that's one thing when people do look at earnings, understand there will be bright spots. Not every company's earnings are going to be bad, although the majority of companies will report a year-over-year decline in profits.
So you pretty much have to take the companies on a case-by-case basis, and not as a sector-by-sector basis.
Right, and I mean, there'll be some cases like we did. We talked about medical here, talked about home builders. I have one other group in here that I don't want to give away, let people go to the written piece, wink.
Right.
But I think outside those few groups, a lot of cases it will be a company-by-company basis, and people have to remember that if they're a shareholder, they are actually a business owner, and they need to stay on top of how their companies are doing and how those companies are performing, and always understand you always have the option to sell stock and buy a better stock instead.
All right, get on over to Zacks.com if you want to check out those potential